Alibaba just reported its full fiscal year of 2023 on Thursday, and today, Friday, we can see that the stock is slumping down, 6%. So we're performing really, really bad. So with you guys together, I want to have a look into what is exactly happening, what are the news, what's the issue, and see if we can find some common sense here. So with no further ado, let's jump right into it. To get a full picture on what's happening, there are two things we have to consider. The first thing is the full fiscal year report of 2023. That will be the first thing we'll look at in this video. And the second thing that we'll look at is going to be the restructuring efforts of Alibaba. So at the moment, they're splitting up their whole business into 6 separate business units, and we're going to look into that and see how that's going to affect Alibaba as well. But for the first part, we'll stick into the 2023 results and we see what we can learn from the report. Alright, looking into the financial highlights, we can see that in the first column we have the quarterly numbers and the second column is the yearly numbers. For the video, we'll be mainly focusing on the yearly numbers because I believe it's more meaningful, and from my point of view, investing is something that we do over the years, not over the quarters. So I like to focus here on the yearly numbers. So we see that from 2022 to 2023, we've had an increase in total revenue of roughly around 2%. 2% is really, really low considering that it's in China, and we see that, that recovery that we've hoped from China is not really happening. And Alibaba is, generally speaking, a good indicator for the Chinese economy because it's similar to like Amazon in the US, where we see however Amazon is performing tells us a lot on the current state of the economy. So it's the same thing here with Alibaba. So we see a 2% year-over-year growth is really not that big. We also see that all of that growth is actually coming from international commerce, which grew 13%, local consumer services, which grew 12%, and Cainiao, so their logistics service, which grew 21%. And there's a little bit of growth, 4%, coming from the cloud business. But their biggest sector and their most important sector, their China e-commerce sector, actually shrank by 1%. So it actually had less revenue than it did a year before. And that's obviously troublesome, and investors are worried about that. And it's one of the reasons why, of course, the stock is coming down. But if we take into consideration the cost savings that Alibaba did, and they're downsizing a little bit of their employees and stuff and so on that they did, they actually had really, really good income from operations, and that rose by 44% year over year. So we have a massive push of profitability, and we see that we had income from operation last year of 70 billion renminbi, that's not US dollars, renminbi, and this year we're having an income from operations of 100 billion renminbi. So really, really good. We also see that the total margins are roughly at around 12%. So that's very respectable, I would say. We see also that our earnings per share has increased 21%, and those are really, really good. It shows that Alibaba is becoming more profitable than it used to be, and it's definitely a push in the right direction. Looking a little bit closer into the income statement, we can actually learn more about what exactly is happening. So we said we had the income from operations of roughly 100 billion, the increase of 44% we just talked about. And throughout the board, we are getting more profitable. Have a look at, as example, the income before income taxes. We see an increase of 50%. So from 60 billion to almost 90 billion. So a really, really good increase in profitability here as well. And we see that the net income also increased 40% almost, right? So from 47 billion to 65 billion. So generally speaking, the company is in fact performing really, really good. Their revenue is not growing that fast anymore, but generally they're getting much more profitable. So they're more efficient in their operation. And as an investor, that's definitely something I like to see and I want to see. Additionally to that, another part that Alibaba is always fantastic at, and I mentioned it in all of my videos, is their free cash flow. And it has just gotten better than ever before. So their free cash flow last year was roughly around 100 billion RMB, and it went up almost 70%. So we are talking roughly 171 billion RMB in free cash flow for 2023. That is amazing. We're talking 25 billion US dollars in free cash flow. It's great as an investor to see those kind of numbers, because I know that Alibaba doesn't need to do a lot of investments in buildings, equipment, and so on to maintain its business. So this is fantastic to see. Additionally to that, we can also see the balance sheet, the cash and cash equivalents. They're currently sitting on roughly 200 billion renminbi, so roughly 30 billion US dollars of cash just laying around on their bank accounts. Additionally to that, we're having roughly 50 billion renminbi US dollars, of short-term investments. So investments that will expire within a year, right? So together, all of those two is roughly around 75 billion US dollars. Crazy amount of money that they're just, having sitting around in bank accounts and, bills and short-term bonds, stuff like that. So extremely, extremely liquid here. So that is even more astonishing considering that Alibaba currently is valued at roughly around 230 billion US dollars. So the company is being valued very cheap. Additionally to that, we're having 75 billion in cash sitting around. So if we take that out, the cash out of the business, right, because that's just cash laying around, the company is currently, valued at somewhat around 160, 170 billion US dollars. So absolutely insane. We're talking 170 billion for a company that has, 25 billion in free cash flow every single year. So Alibaba, for me, I mention it every single, quarter, every single year I mention Alibaba at those prices is a no-brainer. And the good thing is that Alibaba also knows that. Alibaba knows that it's a no-brainer. So what is Alibaba doing with all of the cash that they have? Well, they're repurchasing shares, because the best investment that they can probably do at the moment is buying back their own shares at such low valuation. And we see that they're repurchasing shares worth 11 billion US dollars in the last year. So an extremely big share repurchase program that they're running, because they know it's a no-brainer. So for me personally, if I see a company buying back shares like this, with a balance sheet that stable, free cash flow in that level, their profitability is increasing, it's a no-brainer. I want to get into that business, and I'm lucky holding Alibaba at the prices that I am. The second part of the video that I wanted to discuss is the restructuring effort that Alibaba is going through at the moment. Most likely you've heard about it already. Alibaba wants to split up into 6 independent business units. That's no problem. We don't need to worry about it at the moment. Alibaba will be a holding company, and all of those 6 businesses will still be belonging to Alibaba. Generally speaking, I would say that I would support the move. The idea is, of course, here that all of those business models would become more agile, more flexible. They can react faster to market changes and so on. So generally speaking, it's good. All of those units will have their own management team, which again, I do support that. There is an exception though, and that's probably the cloud. And the way it looks at the moment is that the cloud will be spun off. It's a good thing that it's being spun off, because the cloud business is very different than all of the other businesses that we're having here at the moment, right? And the cloud, if you're a current shareholder, you'll probably get a dividend, stock dividend on the Alibaba cloud, right? So once it's spun off, you're going to get shares of the new company. And then you can decide whatever you want to do with those shares. You can keep them, you can buy more, or if you don't like it, you can just sell it. So there's no real loss to you or to anybody else. To do it that way makes sense also on a tax perspective, because you don't really have to pay any taxes on those shares as long as you don't sell them, right? So that's definitely a good thing here. At the moment, so cloud is being talked about as a spin-off, and also their logistics service Cainiao could be spun off, so have its own IPO, right? That's totally fine because, as I said, you can decide afterwards what you want to do with those shares. You sell them or you keep them, right? Just simple as that. The other business units are going to be the China commerce part, the international commerce, consumer services. So that's as example, Hema, and their fresh market, stuff like that, right? Those are the local consumer services. And then the sixth one will be the digital media and entertainment sector. So those are kind of the 6 new business units that will be running under the Alibaba holding company. Generally speaking, for me, I would say I'm going to go with it. I'm going to take the shares that I get from the cloud. I will be looking on the performance of the cloud. If the performance is very good of the cloud segment, at the moment we see it's not growing that much, but there is push from the government to increase that growth of the cloud businesses. So we see that there's a change in from the Chinese government of punishing Alibaba to starting to support Alibaba again. And we can see that with news such as this as example. Beijing enlists Chinese big tech firms Alibaba and Baidu to boost AI models and computing power. And I think this is very good obviously for Alibaba because the Chinese government is starting to realize that they need those tech companies. They need them to be successful. They need to allow them to earn money. With that, they can compete with the US. If they keep on, punishing and cracking down on tech companies, there's no way they can compete with the US in, as example, AI models, right? So they're encouraging, especially Alibaba and Baidu, to get into the game, to start, get into generative AI, get into, whatever different types of AIs, right? Large language models and so on. And that's really, really important for Alibaba. So I think once the cloud is spun off, I'm going to deeply look into that cloud business. And I might consider, getting a little bit more shares of the cloud business itself. But, that's a long shot. That's going to take a few months until this goes through, right? So that's it for today. That's all I kind of wanted to update you guys on. If you have any questions, if you enjoyed the video, leave a message down below. If any questions as well, leave a message. And then I'll hope to see you guys soon again. Thank you very much.